Hello, in this video we're going to look at some of the meme stocks that are on fire at the moment. You can see GameStop up 74% today, 74.4% on May 13th, and was up quite a bit more than that from the prior close at one point, up about 118, 100, close to 120%. Before falling back down to being up about 74%. AMC also up a lot on the day, and you can see just a huge increase in volume. This had actually started a few days ago, May 3rd. We started to see really big increases in volume. Typically, we were at around 5 million shares on GameStop, and that jumped up to 36 million on May 3rd. 48 million the following day, and then about 25 for the next several days until we get this huge spike, 187 million trading on May 13th. So why is that? Well, for the first time in 3 years, this guy, Roaring Kitty, who is could call it the face of the meme stock craze in 2021, posted his first post in 3 years, and this was it. So the last one was June 18th, 2021, and then May 12th he posts this before the market opens, May 13th, and basically just someone sitting forward in their chair, a meme that kind of says, you know, pay attention. And this was followed up by several videos that are related collaborations of movies, and yeah, fairly steady posting since then, every hour, couple hours. And yeah, so meme stock traders seem to be thinking that this means we're back. Whether that's actually the case or not is yet to be seen. There were no stocks or guidance provided in any of these videos or in the first one. It's just a picture. So what does that mean for traders? Well, volatility and big movement, especially accompanied by big volume, is great for traders, right? Because you can hop in on these high momentum moves, get out. There's lots of volume there. But if we're kind of looking at this as, or if you were looking at this as a potential buy and hold type trade, these are still struggling companies. GameStop, basic earnings per share making about 2 cents per share, and it has a $30 share price. Now, if you were to invest, let's say privately, in a company that wasn't traded on an exchange, and they said, okay, you have to buy a share for $30 and we'll give you earnings of 2 cents per share, it's going to take you a very long time to make your money back. So not an ideal scenario. Now, of course, these are publicly traded companies, and you don't just make money based on how much the company makes. You can make money based on how the share price moves, obviously buying it lower than where you sell it at a higher price. So these are all hype at the moment. There is nothing fundamentally that says these are strong companies. If we look at AMC, it was up 78% on the day, and it also was up more than that at one point, up about 102, 103% before pulling back to close up about 78%. And you can see a huge increase in volume. More than 500 million shares traded. This includes some after hours trading. I think the official daily volume was about 473 million. And you can see prior to this, averaging kind of around 26, 25 million shares a day. Still quite a bit, lots of volume there. Low price stock, and just an absolutely massive surge on volume. And this one, no real lead up to it, just was actually pretty weak heading into that day, unlike GameStop, which was moving up a little bit prior to this big spike today, May 13th. This one heading down a little bit, and then just a massive surge up. And you can see the uptick in volatility there. So same thing, AMC probably even worse off financially. Been losing money for multiple years. If we go to the financials, earnings per share just losing money every year. So again, not a strong fundamental company. This is just purely hype, people thinking if other people are willing to buy, I'm willing to jump in and buy and hopefully sell at a higher price. But anytime you're trading these stocks, realize they could come crashing down as fast as they go up.